In the game of loans, you either win or you learn. Welcome to the game of loans, where fortunes are forged and empires are built. Your hosts, lords of lending and wholesaling, are here to guide you through the realm of real estate and wealth building. Brace yourselves, cash flow is coming. Welcome to the Game of Loans podcast, volume number 9. So,
let's get it.
My business partner, he's back from a long vacation and going on another long vacation very soon. But it's good to have you back, my friend.
Yeah, went to Dubai, had a lot of great conversations with investors to raise some capital. And then, went to Thailand to go meet with our marketing team out there and, have a little bit of fun. So, glad to be back. It's a little cold here in Tennessee, so I'm looking for some warm weather, but, the next vacation's on the horizon, so don't worry.
So what's the lesson? The lesson is set up a fucking business. Don't get married or have fucking kids like I did. And you'll be able to travel and do some fucking business while you're making a lot of money. So what are we talking about today?
Today, we are talking about 2025 and what does that mean for real estate. So
he already said we're going to disagree. So let's see if we fucking disagree on this one.
What we won't disagree on is who won.
Right.
But we won't say the name on the podcast today.
Well, actually, on the podcast we can.
Yeah.
Trump won.
All right. So
fuck you, Harris.
So Trump won, and the Senate and the House, red. So while we got a filibuster, and we can get policy across. It's still pretty narrow. So I think there's going to be moderate policy that gets pushed across, in the next couple of years before the midterm elections. But specifically, let's talk about how this is going to affect real estate, interest rates, and our world. So over the past 3 months, the Fed's already started to decrease rates. We've had 75 basis points of reductions, and the December meeting is this week, and the market consensus is another quarter point down. So that'll be 1%, in the last 3 months of 2024. That's on short-term borrowing rates. Does not directly impact the 30-year rate. The 30-year rate follows the 10-year Treasury, and the 10-year Treasury actually spiked a little bit, for a number of reasons. The bond market, saw an increase in bond yields because there is some fear over tariffs and what that's going to do to added costs, nearshoring investments here in the U.S., and just general kind of short midterm outlook on interest rates and where interest rates will stabilize over time.
Well, I want to talk to you about that. There's a lot of talk where a lot of people say that when the Fed's lower rate, it's on short-term lending, right? On the short-term rates, right? However, I like to say this, very rare occasions where the Feds are fucking decreasing rates and the 10-year ends up going up and the regular rates end up going up.
Yeah, no, so, I agree with you there, but I'm looking at it on like the short term. So if rates come down on the short term 2%, you can't expect 30-year rates to come down at 2% unless the long-term outlook materially changes. So while they correlate down, the speed at which the short-term rates go down and the speed at which the 30-year rates do, it lags.
Right.
So when we're talking about outlook for 2025 and 30-year rates, there's people out there predicting 4 or 5% rates by the end of the year. I think that rates are going to stay higher longer, but are still going to come down. And if we're at an average of 7% today, I think by the end of the year, it's reasonable to expect that 30-year mortgage rates will probably be closer to 6.25. But the short-term Fed rate will likely come down another 1 to 1.5% from where they're at, meaning from a 5.25 Fed rate to 2.75, like right around 3% is kind of where I'm projecting that they're going to keep the longer term Fed rate. And the reason why is because if they decrease rates too quickly, it's going to cause an increase in spending, and that cost savings will likely cause inflation to flatline and potentially go up. And the Fed's goal here is to get inflation down to 2% and keep it at around 2%, which is historically, the average of inflation for the consumer price index. But the 30-year rates, even though the Fed rate may stabilize at the end of 2025, the 30-year rates will continue to go down while the Fed rate stays flat because it's catching up to that lag there.
Right.
So rates will come down. I think 4.5%, 5% for a 30-year mortgage is where they're going to bottom out. But I think it's going to take 2 to 3 years to get there.
And so this is where we're going to disagree. I think that if he doesn't force the Fed chairman out, I think that the Fed chairman is going to fuck with him. And I don't think, there's going to be much movement in the short term rate. That's my opinion. Because he's not going to want to help him out. And he's not going to want the economy to fucking catch on fire.
Well, here's the thing is like the Fed's got two main jobs. It's watching unemployment and watching inflation.
Yes.
And unemployment's going up. Right. And if it continues to trend up at this rate, then we're going to go into a recession, and we're going to have other issues with the financial market. So he could try to play hardball with Trump. I
think he is.
But if there's a lot of underlying unemployment that's not reflected in the numbers today, there's major layoffs still happening at large corporations.
But what does he give a fuck? At the end of the day, Trump has attacked him, right? Because that's what he does. He's fucking motherfucks people, right? This guy's at the tail end of his fucking career. It's not like he's going to go get a fucking job at fucking Goldman Sachs or Morgan Stanley. This guy's going to fucking retire.
Yeah.
And you want to know something? I think he's going to stick it in fucking Trump's ass. I think he wants fucking, he doesn't want, he does not want Trump to have a booming economy while he's Fed chairman. That's my opinion.
Yeah. Well, I don't think that Trump necessarily needs rates to be low to have a booming economy. There's a lot of stuff that he can do with tax policy, and
I agree.
And moving employment onshore into the private sector that will stimulate the economy. But I do agree that Trump wants 2% rates and he wants everybody's house.
I don't think he wants 2% rates. I think he wants the 4.5% rate before the end of next year.
I meant 2% on the Fed funds.
Yeah, Fed funds, right?
Yeah.
Okay, he does. You're right. He wants the Fed funds rate to be at 2%, right?
Because in order to get to 4.5%, 5% in the next 12 to 18 months, it needs to come down like another 200 basis points on the short term curve.
Yes, correct. So he wants the long-term rates to be around 4.5%, 5%. Why? Because then he's going to stimulate the fuck out of the fucking real estate market, right?
Yeah. Well, it's everything because if 30-year rates are at that price, you got to think. Take a step back. Where's Trump's wealth at? It's in the stock market and it's in commercial real estate. Yep. Okay, so commercial real estate is the rates are typically set up at a margin, which is they're based on the asset and the risk of that, plus an index, which is typically. It used to be LIBOR, now it's SOFR, or it's the prime rate. And both of those directly correlate to the, not direct, but they're pretty damn close to the short-term Fed fund rate. So if he gets the Feds to reduce rates by 2%, that means it's a 2% less cost of capital for commercial real estate, meaning values will jump up even more than they'll affect 30-year mortgages. And so if I'm Trump, I'm pushing more for reduction in short-term rates, which will allow all of these commercial properties that are out of the money, meaning they don't debt service, they don't generate enough income to cover the payments. There's a lot of pent-up default risk with these banks that finance commercial, and they're modifying and working out these commercial loans because they don't want to force a sale and crash the real estate market. So that'll create and spur a lot of commercial real estate refinancing, but it'll also improve the value of commercial real estate, specifically multifamily.
And residential.
And residential.
As a buy factor, right?
Yep.
Right? So I agree. But I don't think that this fucking Fed chairman is going to play ball with him. I don't. And I don't think he's going to be able to get rid of him
Well, he's not going to have a choice if unemployment continues to trend up at this rate. If inflation stabilizes and unemployment continues to go up and the country's heading into a recession because of unemployment, then he's going to be forced to do it. And it's not just him that gets to make the decisions. It's a committee of all the Fed chairs.
I agree.
And not everybody hates Trump as much as Powell hates him.
So we don't know.
Yeah.
But we don't know that.
I think it's highly probable.
Powell hates his fucking guts.
Yeah, I think it's highly probable that we have another 50 to 100 basis points of rate cuts next year on top of the 1% that came down.
Right.
And if that gets us to, that'll get us to like 3.25%, 3% on the Fed fund rate. Beyond that, I think there needs to be some major, changes in the health of the economy, for them to come down further than that. But look, another 100 basis points, 200 in total, that gets hard money rates back down into the single digits.
Yep.
We might be talking 9% hard money
9%,
instead of 11, 12 today.
Yep. Right.
DSCR, 30-year loans.
Probably
I think we get in the sixes.
Yeah,
mid sevens. And we were there, close to there for a little bit, but I think mid sixes, to high sixes is in line. And on a 30-year, 6.25 by the end of the year.
Yeah.
But in order to spur housing to really grow, they're going to need to get into the high fours, low fives, because you still have a lot of people that didn't buy a house after the pandemic that are in 3.5% to 6% mortgages. And some people who bought in 2022 and later that are in 6, 7, 8% mortgages that will create more affordability as those rates come down. But you have a unique circumstance in that so many people refinanced and acquired properties late 2020 and throughout 2021 when rates were 2, 3%. They are locked in for life. They aren't ever going to sell or want to sell because, they're not going to be able to find affordability. So unless they need cash out or they're upgrading or downgrading on that house, they're not going to move. Yeah. But we might have frozen 20% of the housing inventory in the country.
I think for now.
Because you're so far out of the money or it's so much costlier with the higher interest rates. You don't want to refi.
If I'm at the fucking 3% rate, which is phenomenal.
Yeah.
And they're never going to see fucking 3% ever again.
Yeah.
Let's just be honest. Not at least in our lifetime. I don't see it happening, right? Unless something fucking crazy happens. But if they're at 3%, it's not going to be much of a push to go to 4%, 4.5%.
Yeah.
You know what I'm saying?
Yeah.
Now, if you're fucking 2.5%, you're right. That shit's locked in. Those motherfuckers are never leaving. That's free money.
Yeah, there's people in like 1.75 rates.
Yeah, they're never going anywhere.
Yeah.
Those homes are going to be locked up and they're going to be rented out until the motherfucker dies or something fucking happens.
So you have Blackstone and Vanguard and these large conglomerates that are buying up all the single family housing inventory because they're building these massive rental portfolios. Mm-hmm. And then you have these people who are in super low interest rates that aren't going to want to sell or refinance because they're in such an affordable payment that have locked up that inventory. So I think that that's going to limit the amount of available inventory. You'll still see prices go up because there's a lack of inventory. As these people go up. So I think
there's an $8 million home shortage.
So I think appreciation will still be there.
Right.
The number of transactions will be less than we would like them to be because a lot of people are locked up or they're forced to rent because they're priced out of the market or, these large conglomerates are owning all the properties. Now, the one thing that I think could happen is if Blackstone and BlackRock and Vanguard and these large companies are forced to sell or decide to dump their rental properties on the market.
I don't think they're going to dump them. I do think that there's going to be regulation that's going to be passed.
Yeah, I mean, RFK said that before he joined Trump's administration, he was talking about adding a special taxation on these large corporations that own rental properties.
These guys don't fucking. These guys
they're
don't
all
pay
in
taxes.
they
don't pay taxes. And unfortunately, as much as we say that these guys like Trump, he's an independent guy, he's not really under the gun. It's bullshit because he's a businessman, right? Musk is a businessman, and these guys on their larger projects, they're in bed with the fucking, Blackstone and BlackRocks and Vanguards.
Yeah.
That's it. And at the end of the day, birds of a feather flock together. Who are fucking Trump's best friends?
Yep.
They're big time real estate guys.
Yep.
Who are fucking these guys borrowing money from? BlackRock, Blackstone, fucking Vanguard, right? PIMCO, right? And are they really going to go out there and fucking hurt these guys? I don't think so. However, I do think that they're going to have a conversation with these guys, because if they don't stop them, they're going to end up owning 50% of affordable housing. Yeah. And that's fucking crazy.
They're on pace to own 60% by 2030.
That's crazy, man.
Yeah.
60%. So just think about the market making that they're doing in the affordable housing, meaning they're going to dictate fucking, and they have long-term patient money, right? So in any fucking medium income, low income area, they're going to make the market on the rents.
Yep.
Right? Because that means out of every motherfucking block, these guys are going to own 6 out of 10 homes.
Yeah. That's why,
that's crazy.
That's why we continue to tell people, like, don't be stupid. If you can afford to buy something, just buy something today. Even if it's not exactly what you want, get in before you're left out, because you're going to get frozen out eventually. Because
what's the content? What's the content that they're putting against me and you is, don't be stupid. Don't buy a fucking primary house.
House is going to crash. It's going to crash.
Oh, and rent. Renting is a lot easier or better. You're younger than me, but did you ever hear that shit when you were growing up? No. Don't buy a fucking house?
I only heard it from people who didn't own property. Right. They were just uneducated or scared. They went through the 2008 crisis and got foreclosed on, major market things that affected them and caused them to lose money, lose their house, get foreclosed on. That's PTSD, and that's just people who are scared and don't understand the current market. I think that there's a lot of probably misinformation being spread around by these large conglomerates to try and force more people into renting instead of finding a path to home ownership. But the crux of it is if you can afford, buy. The housing market's not going to crash.
Nope.
Especially if you hold it long term. Yeah. And just be smart and get some exposure to it.
So a lot of people, I speak to people and they're like, "Oh, this guy told me it's going to be another 2008," and I explain to them there is no reason in the market today to have that type of crash. Yeah. He said, why? I said, because the underlying reason of why that crash happened no longer exists. Yeah.
All the underwriting standards have
changed.
The
underwriting, Every single motherfucker now, pretty much, 90% of them are going full doc.
Appraisals have to go through a third-party verification. All of the government agencies have third-party analytics that will value the property without an appraiser as a secondary measure. 100%. There's standardization.
So when you removed the lending factor, right, in between 2000 and 2007, you had a fucking pulse. You would get a loan.
That was a credit event.
It was a credit event. It was an underwriting credit event, right? And we're not facing that. So when you're not facing that, you're going to have a normal fucking correction. Yeah. What's a normal correction? Anywhere from 3% to fucking, at the worst, 10%.
Yeah. The only thing that would be a major disruption in the market, in this environment, would be if interest rates blew through the roof and went to 10%.
10%.
And then these houses aren't worth nearly as much as they are just because the cost of being.
Why would that ever happen?
Something crazy that would cause inflation.
Crazy.
World War III.
Right.
COVID 24, 25, whatever you're going to call it.
But remember what happened during even COVID fucking 1.0.
Yeah.
Right? Homes stabilized for a little bit, went down.
It'd be a short-term blip, and then the government's going to step in and back it. They're not going to let everybody get wiped out and go into default.
Right. Correct. So at the end of the day, look, the system is rigged where you're not going to lose everything.
Yep.
Right? Even in a housing fucking event or some shit like that, like COVID.
What do? We go print more money and give it to people. And it causes inflation to go up. The dollar's worth less than it was.
Is what it is.
But at the same time, the values, aren't going to take a major beating.
They're not going to take a major beating, right?
So 2025 prediction on my end, 4 to 5% home price appreciation. I don't think we're going to get anything crazy. That's reasonably average, historically. And I think 6.25 for the average 30-year rate is in sight. Outside of that, I think we're going to have a relatively stable, safe housing market, but we're not going to get a giant boom. All you realtors that are thinking a bunch of people are going to rush into the market and buy new homes or sell new homes, I think it's going to be a lot similar to 2024, but more like the back half of 2024, slightly improving. Still a healthy real estate market, still a great place to go out and operate, whether you're flipping, acting as a realtor, or you're a private lender. But, anything with a 4 or a 5 on it, I think is 2026, 2027 with where things are at. And I think we'll still get, 5 to 7% appreciation year over year. The days of 20, 30, 40, that was a short-term stimulus effect from, rates being dropped to effectively nothing, which spurred affordability and a lot of people to go in and buy. But,
Here's my prediction. My prediction is Trump is fucking crazy. And he's going to force him out. He's going to force the Fed chairman out somehow. He's going to make sure that the rates go to the 4.5% on the long term and get down to 2% before the end of next year. And we're going to have a fantastic bang buster fucking year in real estate. That's my prediction, man. I think he's going to come out of the fucking gate looking to set the world on fire. He's not the type to sit back and just fucking snowplay things. It's not in his DNA. It's just, that's my opinion. He's fucking nuts.
I'm hoping your prediction is accurate because that'll be good for everybody here right now. But, I try to be as realistic with my predictions as possible. I still think that if we're at 6.25, and, the Fed fund rate's at 3%, and we got 5% HPA, we can all still make money. Business is good. The worst is behind us. And, it's just time to go out and reinvest and scale the business.
I agree. He's not looking just for us to coast.
He's got 2 or 3 wars to end.
He will.
He's got all of.
I think he will.
He's got all of the shit that was mismanaged over the last 4 years to unwind. But again,
I think. Look, I agree with you. But I think that he's going to end those wars, fucking week 1.
Yeah.
You want to know why? Because he's not tied into fucking those military contracts.
Yeah. No, he'll be able to get it done.
Why don't these guys want to end the wars?
Because they're getting
fucking greased up, man. The more fucking missiles these guys are launching at each other, and those guys are blocking, and this guy's fucking doing this, and he's shooting bullets. Those bullets are fucking missiles. Me and you know all too well. They cost a lot of fucking money, right?
That's why all the defense companies were supporting the Democrats.
That's right,
because they're the ones benefiting.
That's what they're fucking. Everyone's making money, and no one in his administration is related to fucking anything to do with defense.
Yeah,
right. That's why he comes right out and he says, "I get into power, I'm ending fucking wars." Week fucking 1, and I believe him. I think he's going to do it. But where is he tied into?
Commercial real estate.
Yep. And he owes fucking people. He owes people favors, bro. Yep. He does. He owes people favors on the real estate side and the banking side. He doesn't owe anyone a fucking favor on the fucking on the defense, geopolitical fucking defense side, and he doesn't on the pharmaceutical side. He give a fuck. That's why they're going to decimate the pharmaceutical business, in my opinion.
Yeah. Well, it's the food and healthcare are 2 areas where we're just getting crushed as a nation.
As a nation,
crushed. Everybody's obese, everybody's sick, and everybody's hooked on big pharma's teat. And I pray that RFK can get in there and just fuck shit up.
I agree.
Because, we're slowly getting killed off. I told you I just got back from, traveling overseas. I don't see fat people in Dubai. I don't see fat people in Thailand. I don't see people with major health issues there. It's just disheartening, when, you leave the country and you see how poorly, people's health is. And it's not for lack of exercise compared to other countries. People walk here, people walk in other places. The only difference is, in my opinion, is what people are consuming for food and what they're being prescribed for medication. Those are the 2 biggest drivers. It
goes hand in hand.
Yep.
Right.
It's because Big Pharma owns the food industry.
100%. So they fuck you up.
Mm-hmm.
Look, on your note, I'm from Long Island, and the number 1 beach in Long Island is Jones Beach. I saw. It said Jones Beach. It showed 1984 Jones Beach. Out of they took a snapshot during the summer.
There's nobody fat back then.
I think there was 1 out of 2,000 people.
And now it's 2,000 verse 1.
The 2024, the comparison picture, dude, I would say 75 fucking percent of the people were overweight.
Yeah.
Which is fucking crazy.
For corporate greed and profit.
Yeah, and that's just what it is. So in fucking 40 years, you have that type of fucking crazy change, which is nuts. And that's it. But all right, this is the end of this episode. We're on to the next. You've been listening to The Game of Loans, where real estate battles are fought and won. Make sure to fortify your defenses by subscribing. Cash flow is coming, and we'll be back next time to help you claim your throne. The war of wealth continues.